Hi, I'm Jason Fielder. A few days ago, I shared my Forex Arbitrage Explained report that exposed the hidden flaw in the Forex that you can exploit over and over again for 5 to 100 pip gains. If you have not downloaded and read the report, I encourage you to do so now. As promised in the report, you'll learn how to arb the Forex at the open of the weekly sessions yourself in this video without buying anything or spending a dime. So let's get started. Okay, here's what you want to do. You want to take the market watch from all 4 of the different brokerage firms that you're dealing with. You want to put those side by side. That way you can evaluate each individual broker at the same time. You can see here that we have the Euro USD at 1.3348, 50, 49, and then over here we have 51. So you can see they are a little bit different across the board. What you want to do is evaluate those and look for a bid that is greater than the ask by the largest spread between the two of them plus whatever profit there is. So you need to do that calculation. Ideally, you'd want to do that calculation for each individual pair that you have on here. You can see we have the Euro USD highlighted currently. You would want to evaluate those real time as the market moves. Now, that can be a little daunting. You can see that there's 10 to 20 pairs depending on which brokerage firms you're using. Typically, the lower spread ones are the ones that really are active from a arbitrage perspective. So to be able to handle 4 to 10 of those, you're basically trying to calculate that all at once. It can be a little bit too much. So another way to do it is to basically get your order here, get your orders, and only look at 2 brokerage firms instead of 4, which of course is going to cut down your opportunities to do this. But you can see here that we have at this point we have the Euro and the Euro. We have 2 pairs here. You can see the bid and the ask price here. We have 50, 49, and what we want to do is see this price right here go above this price. Plus, we want it to go above that by the largest spread. Right now, we have about a 1 pip spread there, about a 2 pip spread. So we want 2 pips plus whatever profit. And let's say that we want at least 2 pips worth of profit because of transaction speed. You definitely want to give yourself a little bit of cushion. So what you want to do is just sit there and wait for the market to move and then buy one and then sell the other. Now, you need to do that as quickly as you possibly can, ideally at the same time. However, doing it this way, you have to be really fast. Now, at the opens of the week, it can be a little bit better because you can look for differences in price pretty quick. The market doesn't move quite as fast depending on the pair there and the brokerage firm. But what you want to do ideally is have it set up, kind of know your thresholds and be able to buy and then sell. Now, you need to realize that you're going to want to sell the price that's higher and buy the price that's lower. Like I said, bid is greater than the ask by the largest spread plus the profit. So this is the way you do it manually by hand. You need to be quick, be able to click here and then come down and click here. Very, very quick. I actually placed a trade there. But nonetheless, you need to be as quick as you can to get that job done. Well, that about wraps it up for showing you how to do it manually. So let's move on. Right now, you've seen a proven way to pocket pip gains like clockwork. I kept my promise. You could walk away from this video right now and do those steps I showed you. But I'm not going to lie to you. It's a bit tedious and a lot of work to do all that by hand. Plus, in the process of doing the research on the Forex Arbitrage system, we learned a few tweaks that make it even more profitable. As you can imagine, I wanted to make this as quick and easy as possible to do. And so I had my team program custom software to automate the steps to catch these hidden pips. Even better, I had my team incorporate the tweaks and make the automated way of trading Forex arbitrage even more profitable. I'm very excited about how it turned out, and I have to give credit to my amazing team for putting in the long hours and the expertise into making this complex program a reality. Believe me, any old programmer couldn't pull this off, and I'm proud of what they've done. Truly amazing. So let me give you a peek at ForexArb and how easy it is to arbitrage the different broker prices for the pairs. Okay, I've zoomed into ForexArb. This is actually the app that we use to put on trades. You can see in front of you that we have an entries area right here. When a new ARB comes up, it prints right here. Then you hit the enter trades. It buys in one, sells in the other automatically in each brokerage firm. This app keeps track of all the brokerage firms and all the pairs within the brokerage firms for potential ARBs. Now, when you hit the enter button and it will come down here, you can look at profit. A lot of times it's negative to begin with to get past the spread. Then we move into profit, and you click the exit trade button to actually exit the trade. Now let's see. Oh, there's one. Okay, it is opening here. See, it's negative. Now we just have to wait for it to go positive, and at that point we hit our exit trade button. It's gone positive. Now let's see. Have it highlighted so that we can exit. When it hits 3, I'm out. There was 3. Hit the button, and out at about 2.4 is what it showed the last time. Now, that's how quick it is to do a potential ARB. Now, it doesn't happen that quick all the time. Sometimes you're in the trades for a couple of minutes. Sometimes it can last several minutes as the market fluctuates on both pairs or on the one pair in each brokerage firm until it comes back to equilibrium and actually goes past where the spreads are to get you into profit. That's why it's negative to begin with, but you've already locked in your profit, which is key. And then you just hit the exit trade button when it goes positive, and at that point you'll exit from both your brokerage firms and you will have locked in a guaranteed profit. That's how simple it really is. All those steps are being executed at a click of what I call Forex Easy button. While we wait for another ARB opportunity, let me show you proof that these pips are there for the taking and expose the flaw in the Forex that you can exploit for high return and strictly limited risk. All right, let's talk about proof. There's one 2.2. I'm going to move this over here, this data window over, and while we talk about the proof so we can see new ARBs coming in, I created a spreadsheet, an Excel spreadsheet. We have weeks, we have dates. I basically took a year and looked at the opens of the new week for one pair across broker A, B. There's one in the pound for 1 pip. Opportunity, broker C, broker D. Basically, when you combine those, you have broker A, B, AC, AD, and when you have 4 different brokerage firms, you're going to get 6 potential pairings. And as you can see here, we have 1 week where it opened 22 pips, the next 16. There's one for 4.3 in the euro. And basically, when we looked at all of these, and you come down here, what we found was broker A and B had 114 pips at the open, the difference in pips that you would be able to ARB. One was 499, 73, 578, 58, 545. Basically, when you add all of these up, you get a large amount of potential ARB opportunities just at the open of the week. And the open of the week is about 1% of the total ARBs. If you wanted to ARB all day, every day, you basically have an infinite amount of trades to put on. Now, what we found also was that we had 98 trades, and that's eliminating all the ones that's eliminating all the trades that were under 10 pips. So these are all over 10 pips at the open on the euro for 1 year. We had 31 opportunities that were over 20 pips. Now let me repeat that. We had 31 opportunities that were over 20 pips difference from the opening price of one brokerage firm to the opening price of another brokerage firm on the same pair at the exact same time. Had you grabbed all those, that would be 620 pips that you would have been able to grab. Now, think about that if you were to multiply that number by 10 different pairs, where you're going to get 6,200. Now, if you're trading just a normal mini lot, or mini account, that's $6,200. Okay? Our largest opportunity was 57 pips. 57 pips at the open of the week was the largest gap basically that we saw between the 2 different brokerage firms. Okay, now that I've shown you on the Excel sheet, let me show you on an actual chart, because it gets a little bit it's a little bit different when you see it on the actual chart, and we'll leave that up in case we get a few more ARBs we can take a look at. Now, at the open of this new week, we had basically Here we had 1.38393. Over here, there's an opportunity, 4.9 in the euro. Over here, this brokerage firm, we had 1.38583. Basically, when you looked at both of these, we had 1.35. When you put those together, there's another opportunity for 2.8 in the U.S. Japanese yen pair. That one's lasting a good while. Now we have, basically, if we look at the opens of these two brokerage firms, we have 1.38583, and the other brokerage firm was 1.38393. That's a difference of 19 pips. Now, had you sold the larger one, the one that was a larger number, higher, and bought the one that was lower, you would have locked in a 19 pip profit instantly. Then all you'd have to do is wait for them to come back to equilibrium, and you would be able to grab those pips. Now, there's one for 405 in the euro. All right, well, let's take a look at, now that I've shown you the proof, and it showed you on the chart as well as what we found from all the data we collected, let's go ahead and keep looking for opportunities. There's one in the U.S. Japanese yen pair for 3 pips. So we'll keep this up and keep looking for opportunities, and at that point we'll be able to see those. So let's go ahead and move on while this is just while we're looking for opportunities. Just imagine pocketing all those pips. As you can see, the pips are there for the taking. And remember, we've done exhaustive research that proves beyond a shadow of a doubt that you can exploit these price gaps between Forex brokers like clockwork. In the next few days, I'm going to open the doors for a limited number of people to get their hands on this custom ForexArb software. But before I do, let me know what you think. Ask me any questions you have and give me feedback on what you've seen so far. Go ahead and enter your comments below. Watch for an email from me in the next couple of days because I'm going to be going over answers to your questions. Until then, enter your comments below and I'll talk to you in a few days. Good trading.